Chris is asking, just trying to learn how your mind works a bit. Can you talk through how you monitor CFT positioning in the bond market as more investors start to come to your side of the book?
Well, I just monitor it the way I've always monitored it. So if you look at CFTC futures and options contracts, you can see the net long or short position. Which is interesting about this, if you go back to last week, you guys will throw it up there on the board. I, of course, have this taped inside my notebook, and a couple, not more than a couple of our institutional. So what you can see there is 10s, 2s, 5s under the rates column, or the rates rows you could see rather. There's still big net short positions in these things. Now, they're becoming less net short. So that's the first part of a contrarian position being unwound. Contrarian position being 6 months ago, you were max net short. The biggest net short position in the history of treasuries. When I say in the history, like we're talking a long time, okay? Going all the way back.
That guy is not short treasuries.
Yeah, this guy knows that. I mean, God rest his soul.
He's long.
But when you say all of history, it includes everything in this book and before books were created. That was the biggest net short position in the history. Abe Lincoln could tell you, in the history of treasuries. Yeah. Now people are like, we had one client actually say it this morning, and he's like trying to play devil's advocate, and I said, there are no devils on Wall Street. There are just narratives. But the question was simple. Now it's everybody's going to be bullish. Well, first, let's get the net long position into treasuries, not a net short position, okay? Totally. But again, when you go from the biggest net short to something that is not short in rate of change space on a 1-year Z-score, following me mathematically indeed within the prism of long-term history, 1-year Z-score is not all time. 1-year Z-score, again, is going to creep up to being, okay, consensus is no longer short of treasuries. That's going to be the first part of this movie. After the Fed goes dovish 3 times in less than 3 months, of course that's going to be the consensus. So again, sometimes consensus, in fact, most of the time, consensus is what? It's right. In macro, it's right. Stocks go up more than they go down. Consensus is always long stocks, all right? So again, it's at the turns that matter. It's at the turns, okay? Tell that to your clients, tell that to your friends, tell anybody who's willing to listen why your personal accounts, 401ks in particular, hit all-time highs this week. Because you got the turn right. You understood within the history of history. All these dudes, Abe, I used to call him Abe, so I go back to calling him Abe now that I've been educated. One of my buddies, Mike Yoshino, Canadian guy, Japanese guy, hence the name.
Mike Yoshino.
He goes, I come to America, and I'm like, what's up with this Abe Lincoln guy? He's like, Abe? He's like, Mucker, his name's not Abe. But actually, if you go back, some people did call him Abe. I didn't know, because I was not well versed in U.S. history, trying to learn every day. You got old Teddy here. You got FDR here. You got old Lyndon Johnson, who's getting a little bit more respect as time goes forward. You know, these guys all know where treasuries have traded, or they would have. It's a long history.
Mm-hmm. It is a long history.
And never in the history of CNBC have they pitched long treasuries.
No, of course not. There's no commissions. Fidelity's told you that.
Want more Hedgeye? Subscribe to Hedgeye Risk Manager, the holy grail of risk management investing tools. This deluxe suite of investing products includes ETF Pro, Investing Ideas, Market Edges, The Macro Show, Early Look, Risk Ranges, Real-Time Alerts, Plus, Macro Select, and our quarterly investment outlook. Try Hedgeye Risk Manager today. Now for the low price of $24.99 a year.